Hey, good morning, folks. It is a chilly Florida morning here on Tuesday, January 8th. I hope you're doing well. It'll just be Scotty and I this morning here in just a few minutes. But before we do that, man, let me just kind of forewarn you, it is not a pretty day right now on Wall Street. And we'll talk about that more when Scotty joins us here in just a few moments. But before we go there, let me just remind you, there's only one thing that any of us can control, and that's how much risk you have in your current portfolio. And if you're not sure what that number is, or you don't know if it really matches up with what your true risk tolerance is, give us a call at 863-382-0037 to walk through our core retirement design, where we help you design a portfolio that will help you get to the retirement you always dreamed of. So with that, we've got Scotty coming up next.
5.9 White FM, Rascal Flats up next, 8:41. Let's see if Phillip's up. Phillip's up too. Time to head to Statler Financial Services in Sebring. How are you there, Phillip?
Hey, good morning, Scotty. Hey, doing well today, other than it was a little chilly leaving the house. I'm sure it was probably colder for you than for me.
Oh, yeah, I had my big heavy coat. My blood's pretty thin these days, I gotta tell you, Phillip.
Me. So yeah, hey, we're coming off a holiday weekend, and we kind of Dave and I kind of talked a little bit about yesterday how things ended up last week, which was not too bad. Let's kind of start there. It was a mixed bag last week when we closed on Friday. The Dow was down about a little over 0.5%, $201. Ended up the week at 35,911. The NASDAQ was up almost 87 points, about 0.6. It closed out at 14,893. And the S&P 500 up almost $4, not quite 0.1%, to $4,662. So not bad ending up the week last week. However, give us a 3-day weekend and things can start to fall apart. And that seems to be the picture today. Let's start with kind of the regional banks. A lot of regional banks reported. I don't have any major details, but I've got the estimates and the earnings reports. They were all pretty much in line or beat expectations. There was maybe 2 that didn't on the regional front. The big fly in the ointment was Goldman Sachs, Scotty. Goldman Sachs missed their earnings report. They actually missed by about almost $1 a share. And when it comes to earnings, now they did beat overall on revenue, but parts of their revenue were not as good as analysts had expected, like their trading revenue. And that's their revenue from trading stocks and bonds and that kind of stuff. That revenue was off quite a bit for the quarter. And I think that's probably what a lot of the analysts are looking at, as well as just the whole missing the earnings number. They're trading down today, Scotty, 4.2%. That's a pretty big drop for them. Yeah.
For a layman like me who doesn't know a whole lot about this stuff, is that indicative of Goldman Sachs just having a rough patch, or does that mean there's other things going on that we need to be worried about?
You know, for Goldman Sachs, who has been burning it up lately, I think it's probably just an economic indicator for us because, you know, in the fourth quarter last year, I think trading just slowed down. You know, there's a lot of volatility in the marketplace. More people went to the sidelines for a little while. So there just wasn't as much trading going on. And I think that was the overall cause for Goldman Sachs. Now, they weren't the only one. Last week, we talked about JP Morgan because they missed on earnings as well. So it seems like the bigger banks may be having a little bit of trouble in certain areas. Obviously, it's just one quarter. And there's no guidance. They didn't give any guidance this quarter in terms of what they're looking at going forward. So we'll just have to keep an eye on it, look for some guidance going forward. But that's, you know, of the big banks, that's 2 that have kind of missed when it comes to the earnings number. The other, nothing else really hit yet. JB Hunt, the big trucking firm, they hit tonight after the market closes.
Okay.
And there's really not much in the way of economic news. The Empire State Manufacturing Index came out, and it was well, it was not good. They expect it to be at like 25, and they say it came in at minus 0.7. So that just doesn't sound good to me at all.
Oh, wow. Yeah.
From
Yeah.
a
Okay.
manufacturing standpoint. The other big news that hit my ticker this morning, no real details yet, but evidently Microsoft wants to get into the video gaming world a little bit bigger, because they have offered to buy Activision, the big video gaming giant. And so that's helping Activision this morning. Their stock's up some 37%. So just think about that. If you bought that on Friday, you know,
did well.
you woke up this morning and you've like hit the gold mine. So not a bad deal there for those stockholders. However, the folks at Microsoft, not quite as happy, Scotty. They're actually trading down about 1 3/4% this morning. So they're not as happy about that deal as the Activision people are.
Gotcha. Yeah.
But you know, in terms of earnings, it's still early. You know, this week we should start to see more and more every day coming off the holiday weekend. And then same thing with economic numbers, not much today. However, tomorrow we'll have some real estate, building permits and housing starts. So those will be some important numbers tomorrow before we get going in the morning. So
Gotcha.
but that's kind of where we're sitting right now, Scotty.
Okay.
Any other things you got questions about? Maybe I can help you out with.
You know, the one thing I keep thinking about, because it's in the news, and, you know, I go to the store all the time and I see, you know, shelves that aren't full like they used to be. And it just seems like everything is getting really, really pricey really fast. Is this a transitory thing, Phillip? Is this really inflation, or is it just bottlenecks, or is it going to get better? Where are we at with that?
Well, you know, inflation last year hit 7%, the highest we've seen in I think forever, which is a huge number. So I was listening last night, and evidently the supply chain is not improving as fast as they had anticipated.
Okay.
A matter of fact, it is about 50% off. In other words, they thought by within a year or so that they should have the supply chain issue taken care of. Now they're saying it could take 2 years just to get some of this stuff done, which is just not good news in a couple different ways. One is inflation is going to continue to cause inflation to go up, Scotty, because if people want it and they've got the money, they're going to be willing to pay for it if they can find it,
Right.
which that in itself causes inflation.
Right.
So, you know, we really need to get the supply chain issue handled. I'm not sure what it's going to take. I know the president's, you know, basically said, you know, the ports are running 24/7, but you got to have truckers to truck it. And so, you know, it needs to step up and find a way for that to happen. I know that his numbers are plunging when it comes to economics and the economy. People are not happy with this high inflation and these higher prices that they're having to pay for essential items, groceries, you know, gas. That's the other thing I wanted to mention, Scotty, is that fuel, gas, oil prices hit a 7-year high.
Wow.
Overnight.
Yeah.
$85. Yeah.
What it's like up north right now if you're having to pay for a lot of heating oil, you know?
Oh, yeah. Yeah,
oh,
I mean, 85.50 cents a barrel right now is what it's trading, which is just crazy numbers. And then you got interest rates heading up as well. The 10-year treasury is hit over 1.81%. That's a big move for it, you know, and that affects the NASDAQ when the U.S. 10-year treasury starts to move upward. It puts pressure on the NASDAQ specifically because those companies have more debt than a lot of the other companies in that building phase. So that's kind of where those things are sitting at. As
All
we
right.
head into today, it is not going to be a pretty start. Just to give you a heads up, the S&P 500 right now is down 1%. The Dow 30 is down almost 1%, and you got the NASDAQ 100 down 1.5%. So those will leak over until the open at 9:30 this morning. So expect a downward cycle today. Nobody really knows where it'll end up, but we'll have to keep an eye on it and see. So hopefully people have made some adjustments to their portfolio in terms of how much risk they have there. On the other side of the coin, we got commodities.
Right.
Silver is up 2.25%. That's a huge jump for them. Gold's up 0.1%. Like I was saying, crude oil is up. On the actual ticker number, it's up 1.9% to $84.86 a barrel right this second, Scott.
Wow. Okay.
Yeah.
Yeah. Okay. Yeah. What else is going on, buddy?
Hey, that's really about it as we get this week really going from a standpoint coming off the holiday. Folks, listen, if you don't know how much risk you have in your portfolio, that can be a problem, and that's why we developed our core retirement design to help people really and truly design the retirement they always dreamed of. It starts with knowing your risk and knowing how much risk you have in your portfolio. Give us a call at 863-382-0037. And then catch us on the radio show this weekend for the Statler Financial Radio Show, 6 a.m. and 11:30. That's a different start time this weekend, 11:30 on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 and 95.3 FM.
All right. Outstanding. We'll do it all again tomorrow. Thank you, Phillip.
All right, buddy. You have a great day.
You too, my friend. There's Phillip Statler, Statler Financial Services in Sebring. Are you near retirement?
Hey, folks, again, I want to thank you for joining us. I hope that your day is going well. I look forward to speaking to you again tomorrow. Take care. Until then, bye now.